You tap your card. Declined. You try the other card. Declined. You check your phone. The money is there, every dollar of it, but your accounts are frozen. You cannot access a single cent. Rent is due tomorrow, you have no cash. And the bank, when you finally reach a human, tells you only that your accounts are under review, and they cannot tell you when this will be resolved. This happens to real people, more often than you think. And what you do in the next 72 hours determines whether this is a temporary inconvenience or the beginning of a financial crisis.
Bank account freezes happen more often than most people know, because the people they happen to are usually too embarrassed or too consumed with resolving the situation to talk about it publicly. But the experience is common enough that understanding why it happens and what to do when it does is one of the most practically useful pieces of financial knowledge you can have. The most common cause is automated fraud detection. Banks run algorithms that monitor every transaction for patterns that indicate unauthorized access. A purchase in an unexpected location, a transaction significantly larger than your normal spending, a series of small, unusual charges. Any of these can trigger an automatic freeze that happens without any human decision-making and without any warning to you. The freeze happens first. The explanation comes later, sometimes much later. The second most common cause is identity theft. Someone using your information to open new accounts or apply for credit triggers bank security systems that freeze your existing accounts pending investigation. You are the victim, but until the investigation is complete, you are also the person without access to your own money. The system that is protecting you from the thief is simultaneously protecting you from your own funds. Government-ordered freezes are less common but more serious and longer. A court judgment, a tax dispute, a legal investigation. Any of these can result in a freeze that the bank is legally required to maintain until the underlying legal issue is resolved. These cannot be talked away at the branch. They require legal resolution, and they can last weeks or months while daily life continues to require money. And then there are the errors. Banks make mistakes. The wrong account gets flagged. A system error misidentifies a customer. A notification of death arrives for someone with a similar name, and the bank freezes the wrong account. These are the most maddening freezes because the cause is entirely outside your control and entirely the bank's responsibility. But resolving them still requires your time, your documentation, and your persistence against a bureaucratic system that moves slowly. The 72 hours after discovering a frozen account are the most important 72 hours in determining whether this becomes a manageable inconvenience or a genuine financial crisis. And the difference between those two outcomes is almost entirely about how quickly and how deliberately you act. The first call is to the bank. In person at a branch if possible, by phone if not. You need to understand why the account is frozen. You may not get a complete answer. Banks often cannot share the details of an active fraud investigation. But you need to establish contact, create a record of the interaction, and ask explicitly what documentation or verification is required to resolve the situation. The second call, if the bank's answer is unsatisfactory or the timeline is unclear, is to a banking lawyer. Most people do not have a banking lawyer on speed dial. But a single consultation, montable de sequence, often available within 24 hours, can tell you whether you have legal grounds to demand faster resolution, what documentation to gather, and whether this situation warrants a formal complaint to banking regulators. Banks respond differently to legal representation than they do to individual customers. A lawyer's letter frequently accelerates timelines that the bank's customer service process extends indefinitely. The third action, simultaneously with the first two, is activating your human safety net. Rent is due tomorrow. You have no access to your own money. This is a moment that requires setting aside the embarrassment of asking for help and making the calls that the situation requires. Most people in your life would rather lend you money for a few days than watch you face eviction because a bank's algorithm made an error. And the fourth action, which most people do not think of until it is too late, is opening an account at a different bank immediately. Even if the frozen accounts are resolved tomorrow, the experience has just revealed a structural vulnerability in your financial life. Fixing it while the crisis is still present is the most reliable way to ensure it actually gets fixed. Here is the financial protection system that a frozen account forces you to build, and that you should build before the freeze happens rather than after. 2 banks minimum. not two accounts at the same bank. Two different institutions, ideally one traditional bank and one online bank or credit union. When one is frozen, the other is unaffected. This single change eliminates the most acute form of financial vulnerability that a bank freeze creates. It takes 30 minutes to open an online bank account. It should be done this week. Physical cash reserve. 2 weeks of basic expenses held at home in a secure location. This is not tinfoil hat financial paranoia. It is the same logic as keeping spare batteries in bottled water. Systems fail. Having a physical reserve means that when digital payment systems are unavailable, basic life continues uninterrupted. 2 weeks of basic expenses for most people is between $500 and $2,000, an amount that is achievable and that makes the difference between a crisis and an inconvenience when the digital systems fail. A credit card from a different institution than your primary bank. This is the backup payment method that works even when your bank accounts are frozen. It creates a 30-day buffer between the freeze and the first impact on your actual cash flow. And it comes with consumer protections that additional layer of safety against fraudulent charges. Digital payment accounts, PayPal, Venmo, or equivalents, with a small balance maintained separately. These operate independently of your bank and provide an additional payment option when bank systems fail. None of this requires significant wealth. None of it requires complex financial knowledge. All of it requires only the 30 minutes of action that most people keep meaning to take and don't take because nothing has yet gone wrong. The frozen account is the thing that finally makes the 30 minutes feel urgent. The lesson is to find the urgency before the freeze rather than after it. This is the 12th episode of this series, and looking back across all 12, across the betrayal and the lottery win, and the 50 billion lost and the frozen accounts, the same lesson appears in every one of them, wearing different clothes. It is not about what happens to you. It is about what you do with what happens to you. The person whose best friend stole their business idea, what they did next determined everything. The person who woke up owing $1 million, their first 72 hours determined the next 10 years. The person who won the lottery, the decisions made in the first week shaped every year that followed. And the person whose bank froze their accounts, how? Quickly they acted, how many backup systems they had, how clearly they understood their rights, determined whether 3 days of frozen accounts was a story they told later or a crisis they were still managing months later. Every scenario in this series was hypothetical. The lessons in every scenario are not. They are as real as the bank account you checked this morning, as real as the single institution where all your money currently lives, as real as the absence of a physical cash reserve or a backup payment method or a lawyer's number saved in your phone. The question that every episode asked, "What would you do?" was never really about the extraordinary scenario. It was about the ordinary version of the same question that shows up every week in decisions you actually make, about who you trust with things that matter, about how much financial vulnerability you are carrying without knowing it, about what you are building and what you are protecting and what you are leaving exposed. The frozen account resolves. The money becomes accessible again, and you walk back to the same grocery store, the one where this episode started, and you tap your card, and this time it goes through. Not because nothing ever goes wrong, but because when it went wrong, you built the systems to handle it. That is the answer to all the 12 questions. Not what you would do if the extraordinary happened, but what you are doing right now, today, to be ready when it does. Open the second bank account this week. Start there.